Part 2 in this 4-part roundtable conversation places advisors front and centre as your peers discuss the pain points impacting both themselves and their respective businesses and what needs to change to overcome these issues.
Let's ask the advisors in the room, and I'll include you in that, Mark, even though you handled your shingle a little while ago. What your take is, Amanda, if I can start off with you, perhaps just go around the room, on Danny's comments about pain points and what's needed in terms of you doing your job as best as you can.
I love the idea of the collaboration and cooperation and simplifying things like, if there was one personal statement for every company, how much easier would that make life? Just simplifying and streamlining. Most advisors are screaming for that, so that would be easy. I like that there's innovation within the industry. Like I look back to, I remember when Vital Cover was introduced in the late 90s, the Barnard brothers in Africa came and toured and introduced what was then, critical illness cover, and we've had Macquarie introduce, again a South African thing, the severity-based cover. Some of them stick, some of them don't. So we've seen those sort of innovations over the years. At the moment, we've got NEOS looking to, collaborate with other companies like MLC and have a tidy back office service with the Encompass product. There's new entrants like Integrity who have no legacy book, who can get back to basics with the simplified products. PPS coming on board with a cooperative model. There's often this innovation out there, but what do we see that we like and take on board instead of just trying to sell product all the time? How can we best go about it? Obviously, affordability is a massive issue, and with some clients whose health has deteriorated, probably couldn't do something as innovative as iExtend. I've actually said to them, why don't you get your children to pay? This is their legacy. You've got 4 kids. If they pitched in the $50 a month, you can keep the cover and it's for their benefit. So I think us thinking outside the box, the companies coming in with new ideas, if we can just bring all that together, it is an exciting future.
Okay, so more collaboration, which includes the generic personal statement.
Absolutely.
Okay, what about you, Catherine? What do you think?
Yeah, certainly it would be wonderful if we could have, pro formas that would be usable across multiple insurers, or, for example, the sharing of data, medical records, for example. If you look at My Health Record, that is a wonderful tool that advisors can use as a way of accessing big data for the purpose of pre-assessments. So I find there are so many pieces in the puzzle that need to be addressed. It's never just one element. On technology, there are so many different arms that could be tackled. I look at when insurers started doing the e-applications and the online process, so that was a wonderful advancement, but we haven't seen the same offering in terms of the back end. So you could have an insurer where you'd have a wonderful onboarding experience for the client, but then the maintenance of that client to make simple changes was almost more burdensome than the whole underwriting process. So that's where you've got a challenge when an advisor might be considering moving to another insurer simply because it is easier for everybody involved. So if insurers can get their act together on the tech side for keeping business and makes that simpler, then that works in everybody's best interest. So we've seen some innovation to date on that place, and more people are focusing on that area, but there is still a really long way to go. But then you've also got the skill set of the advisor as being able to understand the gaps. What can they do in terms of their own tech solutions, how well they pre-assess a client, and their knowledge as the field underwriter effectively to make sure you've got you're matching the client's circumstances to the best product. We've got product innovation in itself, which goes beyond the back office end, and then we've got big data under the way, we've got regulation challenges, we've got the QAR report which will be released shortly, and that should see some the creativity flow once that gets announced. And then we've got the role of licensees and what they can do, and then we've got third-party solutions like LifeBid, which is coming to the market, designed to marry up the role between advisors and insurers and technology. So I don't think we are short on possibilities where we can make the process smooth.
All right, thank you for that, Catherine. Mark, then what's your take on what Danny had to say and the fact that there might be, there's really multiple answers across multiple areas?
Yeah, and anything that Danny says, obviously it's got to be right. So we'll just take that for granted. But from everyone's saying, I think from an advisor point of view, the biggest change over the last 30 years would be that the uncertainty that you will have a policy accepted. So it's very hard if you're and the whole commission goes fee debate because, we're getting commissions because we always knew 1 or 2 cases may not get accepted, and so average itself out. And there's, you should be charging a fee, but if you can't get that certainty of someone being accepted, how can you charge a fee? And so it's very hard from a client's point of view, so I'm paying for something that I may not actually receive. So for me, there should be innovation in that there is more certainty that a policy will be accepted or accepted with conditions, or that there is a lower type of policy that, if we can't get you for this, provide this cover, you can provide that cover. And I just think, the actuaries in the room, they have to do the calculations, but must be, the actuaries, you've seen the direct insurance now, and they're providing up to $1 million of cover without virtually, 3 questions or something like that. So there's obviously ways you can get around this, but I just think from an advisor's point of view, if the product provider can provide some sort of certainty, even if it's not exactly what they wanted or asked for, but they can provide a separate solution, may not be as good, but at least, you give the advisor confidence that they've got a product that can actually help their client.
Okay, very good. Thank you, Mark. So we're going to be talking about product in a minute with Alarm, but before we do, if I can just turn to you, Adam, and get your take on Danny's reflections about pain points for the current advisor and advice business before we start to talk about product.
So picking up on Danny's point, this is an intangible product, so it does need to be advised on, and you do need an advisor to motivate people to take action. I think it's really important to have a distinction between advice and product though, and more than ever now, if you're an individual advisor or you're running a business, you really do need to understand your costs associated with running a business. And I think this is a process that we've been through with our team. We've really broken down the component parts, and so there are certain clients we can engage. And there is a fee component to the advice that we provide. And there are, I think because of the change that we've seen with regulation, I know there was a report done by KPMG 2021 that was indicating that the cost to provide a statement of advice, a comprehensive one, is around about $5,000. Now, it's not that if it's insurance only, if it's scoped, but there is a cost to that. So I think there is definitely the need there more than ever. And I'll come back to the point you make about we're seeing inflation going up, cost of living going up. More than ever, people need insurance. Nothing's changed in that respect. But as an advisor or a business owner, you really need to know the space that you're working in. And I think there is a case potentially now more than ever for specialisation. And so, the other, I guess, as a business owner, a pain point is just, attracting and retaining the right people. We've gone from 28,000 advisors down to 16,000. So I think we look at the Royal Commission, and I think some great things have come out of it. But there have been some perverse things that have come out of it, and the concern now is, consumers need advice, but it's very, very difficult and expensive to access advice. And I think, the quality of advice review process now more than ever is really important, so that not only the top end of the market can access advice, but you've got everyone being able to access advice. So I think there's a lot of work to be done. You get to the point where you've written the application. There's so much work that happens even before you get to that point. Putting to one side what the life insurance process entails. So a lot of elements to that. Plenty of things you can unpack there.
Yeah, I get puffed out just listening to you.
I might just add to that, because I think that it probably has been missed a little bit. That's totally right. Like, there's so much work before you even get to doing the paperwork on influence, and then there's the whole admin, heavy lifting stuff, and then even afterwards, what we're hearing from our audience is that it can actually be a real risk to their credibility in the current environment, with things the way they are in terms of how unsustainable the marketplace is on premiums, and it's a repeat pattern that's always happened. Someone goes aggressive on pricing and a new offer, and then soon there is a flow of premiums, and it's happened multiple times across multiple product providers. Everyone's probably sat in that. There's obviously a research system that sits behind that, encourages that sort of purchasing, and it's very difficult, again, for an advisor to discredit what a system says when you're trying to do the best thing by the client, and there's a significant difference in price. So I think that there's another undertone to this issue is once I've actually taken someone through it, yes, I've done the work, then I've done the manual work, but there's this reputation concern that I actually have, because I've said to someone, particularly with the level premiums increasing, that they just go, they're so significantly outpriced on what the expectation was and what my modelling was, and I feel like I've been the person that's recommended this product to the client for their own benefit. And they're not going to understand as a client all the different influences that actually influence that, and it's probably not just, I couldn't predict this as an advisor, it still reflects very badly on me and my relationship with the client. So we had one advisor, for example, in a podcast that I know Catherine was a part of. So, I came into the office one day, I sold a client, convinced them on the level premium, and they called me up and said, they've had an 80% increase in premiums. And I just said, don't worry, it's obviously a mistake and there's a decimal place that they've got wrong. And it wasn't. So, they lost, they'd supported it, they lost a lot of client relationships that they've worked a lot. So this is another point I think's been missed, where people are going, you know what, this is too detrimental to my business from a time perspective, from an uncertainty perspective, and it just isn't something I'm going to push uphill.
A lot of heads nodding around the table, Dan. So I'm going to ask what your take was on the advisor comments that we've just listened to. So
Yeah.
I think you've given your answer. Adam,
I think advisors now more than ever need assistance in terms of those soft skills, so that when they've got those challenging conversations, they're armed with the right language to deal with these situations. So we had a lot of our clients see 72.5% increases in their premiums, and our persistency, in terms of what we held, was very, very high on the basis of nothing had actually changed in their circumstance. They still needed the insurance as much as they needed to. We started asking people the question, if let's say you had $1 million mortgage, if interest rates went up by 1%, what is that going to cost you? There's another $10,000 a year. Does it mean you're going to sell your house? Well, no, it doesn't. And so in terms of your income protection, yes, it may have gone up by a significant amount. What's actually fundamentally changed in terms of your circumstances? Do you still need it? And even though it's more expensive, is the need still there? And so I think, and this is one of the great things about MDRT, it does actually provide a lot of the soft skill and language training around how you deal with those challenges.
Okay. So perhaps one of the differences between a mortgage increasing and your level premiums increasing is the issue of trust.
Sure.
That you have different perceptions, even though the argument is quite reasonable. I hope our viewers and listeners have been listening to that. That's a very good point you raised.
In part 3 of our roundtable, our panellists consider the issue of trust and whether new or different life insurance products can contribute towards delivering greater certainty for the consumer.